and gentlemen, welcome back to Walk the Block, where we are navigating digital finance all together. We got a good show here for you today, and we are trying to figure out what the heck exactly is going on with the markets. Because if you've been tuned in for the last couple of weeks, trying to listen to me hem and haw about what the 6-day cycles are doing and how we're approaching a cycle low potentially on both of them, yeah, you do this job long enough, you will get proven plenty wrong by technical analysis randomly from time to time. And today is one of those days. As we are currently speaking, the Bitcoin price got all the way up to about $79,000 and change, when last week we were talking right around $63,000. So definitely a big shakeup. We're going to be diving into exactly what's going on with the market, what the technical analysis implications are, and then also why exactly are we seeing this price action right now, when really we're in a time where this is very unprecedented. So big news overall. We're going to be breaking it down. So yes, heads up, this is definitely going to be a Bitcoin price focused show, but we're going to be talking about the impacts on the rest of the market as well. So stay tuned for that. As always, I'm your host Zenith, and I'm joined by my excellent co-host Tracker. How you doing, buddy?
Doing good, man. We've been pounding the table for I don't know how many months now that the risk was to the upside. So for those who kept sitting on the sideline, I don't feel sorry for you, but train is starting to leave now. Is the bottom definitely in? Time will tell. Basically, we're going to talk into what they decided to come out with on buying back U.S. debt aggressively, doubling down, and that basically caused everything to take off. And if you noticed, the overall markets didn't really take off. It was the crypto market that really exploded. Same thing with gold and silver; they also moved too. So anything that's hard assets that are tied to this is basically a quantitative easing without printing money. Is basically what they've done. But this is they had to do something, and we were kind of talking about this over the last month, that they're gonna have to do something. Like they necessarily don't want to cut rates, yet inflation's out of control, and at the same time, no one's really buying their debt, and the U.S. Treasuries are been tumbling. Same thing with the 30-year fixed rates and stuff. So they had to step in, and this is them stepping in. So we'll dive into more of that. But yeah, everything's going great, man. Like I said, we'll talk about price action next, and I'll tell you, I did take a little bit off of Ethereum, just some short-term positions, nothing major. Still holding an extremely heavy bag of Ethereum, just building up a little bit of I always like to have some dry powder, always. And this was just an opportunity. I was 100% all in. This allowed me to kind of get, nibbling a little bit as we've been moving up, just to get a little dry powder pulled out, so I can have as protection. That's all it is.
But there you go. I like it. Excellent. Well, tell you what, let's get into it and go ahead and pull up the charts, because that's what we're talking about mostly today. Alrighty. As I said previously, current Bitcoin price, $78,500. Had a little
like a meme coin. Looks like a meme coin.
Like it actually. Price got all the way up to $79,000 and change. So overall, what are we looking at here? Well, if there was any support or resistance at 72,000, we punched right through that. And if there was going to be any other resistance, again, at 67,000, we punched right through that. And if the moving average indicators were telling us anything, we were about to have a cross here on our 20 and 50 day, indicating a shift towards the downside. But instead, we just got this massive skyscraper of a green candle 3 days in a row, effectively, that punched us all the way up through the 200-day moving average. I'll be honest with you, this is not something that I really had in the cards. The 200-day moving average is a very important indicator, because it's our long-term indicator about kind of which direction the overall market is going, and is going to be going for a hot minute there. So anytime you break through this, or even kind of flirt with it, it's a bit of a big moment. And for us to just have this dramatic of a move right through it is pretty wild.
Just as far as perspective, well, hell, Zia, just to cut you off, just to put that in perspective, a little bit of context here. This move here is like one of the biggest moves in the last 5 major moves going back for quite some time for Bitcoin. Same thing with Ethereum. These are big moves, but they're not just big moves in price. They're also big moves with volume supporting the move. So that's another thing. So sentiment has definitely changed immediately with what action was taken. We'll get into that, but yeah, it's definitely has changed.
That is true. And you hit it right on the head there. As far as the volume goes, you can see the volume candles right down there. That is 3 days in a row of solid volume. that even outpaced when we had that initial drop all the way down to about $59,000. And it, it looks like a lot on the small chart. If we actually zoom out a little bit, it's not as massive as some other things. Like we were averaging this volume back in pretty much like February during this little like volatile area right here. And then also consistently, we got some days of spikes on it after the all-time high there. But as far as what's going on, we're seeing volume spikes that are akin to after the ETF got approved back in 2020. Is that 20? No, this is the election pump of 2024. And then also going back to like the original ETF approval and some of the major pumps that went on there. Like that's the size that we're looking at here. And the thing that's really odd about it is the timing, which is we expect this kind of volume when the market's like getting pretty hot and pretty saturated. Don't really expect it at times like this. But overall, what we're looking at right now actually is seeing if we can actually beat this little high back from May. We had $83,000 on the dot. So that 83K line is this next little area that we're checking to see what's going to happen. Because if it punches through that, then there theoretically is a case that the bear market's over. The low is in. We're going to the upsides now. We've been floating around a handful of theories that are not 4-year cycle related. This is possibly that very small percentage chance that those other theories could be correct. Because keep in mind, we only had what was effectively like a 55% decrease in price from the all-time highs down to where we are now, or back where we got there. Yeah, 54%, as opposed to the 77-78% of the last bear market. And if that's the case, that's a pretty significant deviation because that is a massive change in the amount of drop during the bear market cycles. But we'll get into that in a second. I want to break down the micro a little bit more here. I'm going to switch over to the 1-hour chart just so we can get a better vision or clearer picture of what's going on here. As far as what we're seeing, it looks pretty much just like a straight up climb. If you want to try to break down Elliott wave theory on these smaller time scales, it's a little more difficult to do and less reliable as well, by the way. But theoretically, people are pointing out that we could have had like a 1, 2, 3, and then we're looking for a retracement for our leg 4 before the final push of up to 5. And if that's the case, it's actually not that crazy to say that 83,000 is in the cards. Does it mean it's guaranteed? Absolutely not. If anything, after drastic movements, there's usually some kind of a pullback just because markets get overheated, people take profits, people kind of make foolish decisions sometimes as well. And there is that natural capitulation that happens. So if that's the case, looking at the daily chart, we don't really have any pullback at all so far, meaning that this run could still continue, or theoretically, that wick there, that could be the top. Granted, it has still happened within the last 24 hours. Like this was 1, 2, 3, 4, 5, 6, about 15, 16 hours ago when we actually had that top at about 79,500. So this is still very fresh, and it's almost like the on the ground breaking news reporting going on. But as far as to finish up the kind of the smaller timescale stuff, last week, 60-day cycles, and 2 weeks before today as well, trying to figure out what the heck exactly is going on. This, once again, throws a wrench pretty much in all of that. Because if we look at it, well, we're currently on day 51 of the cycle. Day 51 cycle high, it's not unheard of before, but typically you see a lot more supporting action that leads into it, as opposed to just like kind of some normal, just meandering, and then all of a sudden just busting up through the ceilings. That's very, very odd. And to be honest with you, it kind of matches the last cycle that we had, which is odd things going on, which is not only did we get below the cycle start once, but twice, but then also recover above it and then get very confused about where the cycle low is. So currently, I happen to think that this muddies the waters even more. You could say we're on day 51 of the cycle. That's fine. You could also say we had a 59-day cycle previously and that it was a failed cycle. And now we're on day 18 of a new cycle. That also at this point, based on the action that's going on, seems entirely plausible too. This is one of those cases where the 60-day cycles are like really thrown through a loop right now, but I can guarantee that we will come back to some degree of normality in the near future, whether it's in the next cycle or realistically the cycle after that. Everyone's going to line back up and be like, yep, that is a clear start. That is a clear finish. We are back on the 60-day cycle. But as it stands right now, what this indicates is that if we're on the 18-day cycle, that's still a lot of cycle to run, and price could still keep performing towards the upside. If we're on the 51-day cycle, that means that we don't have that much more to run, but there's still a possibility of it happening. And If you look at Elliott wave theory, where you have a 1 that goes up, a 2, which is your retracement, 3, which is your longest, strongest, and most aggressive leg usually, that's what we're seeing right now. So that leg 4, the second retracement, that could be the cycle bottom on this 51-day cycle. And if that's the case, the next 60-day cycle might get off to a pretty decent start as well. That wave 5 in Elliott wave theory, it can be one of the most erratic, but it can also be aggressive towards the upside as well. Typically, your wave 3 is going to be the giga pump, the big one. We kind of saw that in the summer of 2023 when Bitcoin had its initial pump, or was that 24? I think it was 24 actually. Yeah, but again, we're looking pretty zoomed in right now, which is one thing to keep in mind, because at the same time, like, this is what the overall chart looks like. And by the way, on the weekly, this is one of the strongest weekly performing candles as it stands right now since like May of 2024. So we legitimately have not seen this action in over 2 years. And the last time we saw it was actually in a full-on bull run. And right now we've been hunting for lows. So this is definitely a shocker. Alrighty.
Yeah.
What are you thinking?
I would look at it more of the Ethereum. Obviously, Bitcoin's been outpacing Ethereum the last couple of days after the news, but everything. I was looking more closely at the Ethereum price chart, but what I will say, same thing for Bitcoin. Anytime you get these massive moves like this, typically the way it translates into, you might actually get a little bit more action to the upside, but then there's some sideways chop to typically a quick pullback retracement during the chop at some point to allow people to get in. So if there's any type of pullback after this move of any sort, that's probably your last opportunity to get in at these lower levels. Now, some people are going to, there's still a lot of people that are still stating that, you know, this is the just part of the relief rally, and then we're going to start going back down, and that's it. But here's the thing that we've been talking about constantly about this. The market makers who have already been in all this stuff, they've been building their bags. Why are they going to let the competitors get in after they've been building up positions right now? A, that's one. Two, with the news that just came out, we're going to get into that in a minute. That's a game changer. Consider this I don't know, it's a white swan event. It's not a black swan event, it's a white swan event. You know, it happened, it shocked the markets. Now you're going to get a turnaround. This is absolutely, and you're getting momentum and you're getting volume change shifting. So everything is now shifting to be more in favor of, you know, crypto coming back on with a risk on asset. But ultimately, like, what I'm going to say is a price action here. And if you also look at the RSI indicators, especially with Ethereum, Bitcoin, anytime you get these high RSI prints, that's typically going to be a short-term pause in the movement going up. Not to say we can't have a little bit more extenuation. We can, certainly, but you're typically going to get chopped sideways, and which is a consolidation, put in a nice floor, and then it starts its next leg up on the next move up. That's typically what happens on these moves. I was looking at more like Ethereum, Bitcoin. Bitcoin still supported. If you looked at the 200 weekly moving average, it still supported it. Never really violated the 200 weekly moving average on Bitcoin. It pretty much bounced right off of the 200-day weekly moving average. If you noticed that, you know. We got back, we're well back above that. Then on top of that, if you look at Ethereum, Ethereum is now trying to get back above the 200 weekly moving average. So they're both trying to do a 200 weekly average like we talked about. Typically, that is an area. If Ethereum goes below 200 weekly average, great time to get in. If Bitcoin is right around 200 weekly, that's a great time to get in. And history has shown that those have been great opportunities. And once again, it's proven the same. Now, regardless whether or not we took off in the last couple of days or not, those are always good entry points. But with the volume, with the high overheated RSI indicators, this big momentum up, you will see some profit taking. Keep in mind though, some of this action you're seeing is short covering too. There's a ton of shorts that got liquidated during this move. So that's also short covering, because what people have to do to unwind their shorts, to get out of those short positions, they got to buy back stocks. So that adds to the buying pressure as we go up. So that's when you get these exacerbated moves. That's why I think you're seeing the continuation. People are trying to unwind these shorts and everything that they've got on. So there's that adding to the price action. So it takes some days for this to unwind, because it was a huge shock. It definitely shocked the markets and caught everybody off guard. There's other things we'll talk about too, but that's what I'm looking at. RSI looks extremely overheated. Go back and look at the history. Look at 200 weekly moving average. Go ahead and look back at normal price action when we get these big moves like this. Compare it to the other moves that are recently happened, and you typically get this little grind up, maybe a little more sideways action with a potential drop. But typically when you get that dip, that's the last time, and it snaps right back up because the buying pressure is too strong. So keep an eye out for that. And if you're looking for to get back in on any points. Wait for those big pullbacks to get in. Don't chase this. If you start chasing now, you're full. Like you should have been getting in before all this. During that whole sideways action, you should have been getting in. If you haven't gotten in now, don't be stupid and chase. Sit back and wait for a pullback. You'll get a pullback. It doesn't feel like you're going to get a pullback, but you'll get a pullback. Now, how much? That's to be seen. That's going to tell you how strong this is to know what that pullback's going to be. But that's how I'm playing it.
That's
look
true.
at the Ethereum price.
Yeah, Ethereum currently sitting at about $2,500. So we got up above the little highs that we had back in March and April. So different shape, different levels that are going on with the Ethereum price. But keep in mind, when it comes to the moving averages, especially on this one, because of the history of the Ethereum price over the last 4 years and how shorted it got, the moving average data, especially the 200-day moving average data, is pretty jacked up. Same on the weekly, though. So looking at this one, volume did come in decently, sufficiently. 3 pretty strong days there. We're still seeing similar action to when we've had real dramatic events to the downside previously.
It's still hitting fresh highs, and it's still fitting fresh highs as we speak right now. Yeah.
Yeah. So if we zoom in here, yeah, that is strong continued upwards charge. That it's not really slowing down. If anything, you really got to zoom in there to see anything. And if you get in there, you're just looking at realistically what is just an upwards channel after the initial just mega pump, and it's still just continuing to grind towards the upside. So as far as
all of this has been brought to you by TradFi again. So
yeah, I think part of it, the reasoning for it, we'll get into that in a little bit. But the reasoning I don't think is super clear. And I think there's a multitude of factors going on here. And I think part of it could actually just be genuine market action of people getting in. Granted, that is motivated by something, whether it's people finally woke up and were like, yeah, $2,000 Ethereum. Yeah, it's a good price. So yeah, real quick, the differences between the Bitcoin chart and the Ethereum chart. The Ethereum chart had not quite the same structure where this low never got lower than the initial cycle low, lining up with the Bitcoin 60-day cycle. Less action going on here. Did get above these highs. That's the big point that I'm really going to be hammering on, which is that Bitcoin had a very strong run up in May, April to May. Ethereum did not as much. It had a small run, but it really didn't have that just continuing staircase effect towards the upside. Now we're back above it for Ethereum. Meanwhile, Bitcoin is going to have to contend with these higher highs. At the end of the day, Bitcoin does drive the market when it comes to the liquidity effect of everything is tied together, so they move somewhat proportionally. So realistically, the way that I view this is that Bitcoin has to contend with this high here at 83,000 so that Ethereum can continue to maybe even go contend with this high back from January, which is about $3,300. If that's the case, that means that eyes are kind of on Bitcoin, but at the same time, it doesn't mean the rest of the market can't pump. In fact, I'm going to hop over real quick to Coin Market Cap. Looking at stuff over here, if we go, there are a lot of tokens that are actually having pretty good days. And these are not like tiny market cap meme coins or anything. Athena, $1.4 billion market cap. Pepe is a meme coin, 1.8 billion, still one of the largest meme coins out there. I'm pretty sure it still cracks the top 100. Pudgy Penguins, Zcash, XRP, Aave, Bitcoin Cash, Curve DAO, Pump Fun, Link Token, Arbitrum, Hyperliquid, Doge. Like these are all tokens that have been outperforming over the last 7 days, not 24 hours, the last 7 days. That includes
most
time
of are most of these in the top 100?
I believe so.
Most of these in the top 100 though. Yeah,
because like the smallest one that I'm really looking at is like this XPX 6900, which is like $500 million. Pudgy Penguins is a little over $500 million.
Yeah, half a billion. It puts you in the top 100. Yeah, it does.
Oh, for sure. So the overall point that I'm getting at here is the smaller tokens are outperforming. However, if you're going to take a look at one of the other things that we can find here, the old altcoin season indicator, 36. That does not indicate altcoin season, even though in the very temporary point, it is outperforming. The reason being is the way that the calculations work. This is top 100 coin performance over 90 days. You got to scroll down, find Bitcoin, and then see how much is above it, how much is below it. That's going to be your calculation. Because we're taking 90 days, it means that these altcoins that could have been bleeding for a long time now, because keep in mind, this also does capture the data from when we had that drop from about 75 or 83,000 down to like 59,000. That data is captured in this metric right here. So if you're looking for outperforming altcoins, the altcoin season indicator is a helpful tool, but it's not the end of the story. You got to understand the math that's going on behind here so you can see it. And instead, you can look at this kind of stuff and ask yourself, okay, is this continuous performance? Is this just one-time spike? What exactly is going on? And the way that I see how the market's going to kind of be performing is that altcoins are looking to Ethereum, but Ethereum's also looking to Bitcoin. They can operate independently. In this case, I happen to think they're operating simultaneously at the same time. But at the end of the day, Bitcoin does drive the rest of the market. Ethereum's right there with it. But it's that. The other thing that we can see on this is probably what we saw in the last 4-year cycle, which is that if the ETF flows are pouring directly into Bitcoin, that does create an opportunity where you can remove that incoming volume and money from the actual liquidity effect with the rest of the market. What you can do for that one is you got to hop on over to your good old ETF inflows. This is CoinGlass. This is the one that I use. Looking at our 90-day inflows, we've had a pretty solid week here of inflows coming in because we're talking about 850 million, 700 million, quarter million, pretty much consecutively. Granted, it doesn't exactly wipe out all of this stuff previously, but this is still a very strong move towards the upside. If you want to extrapolate it further out, is this the largest influx we've seen? Absolutely not. It's going to take a lot bigger candles, and it's going to take a lot more consistent candles to really show that the inflows are coming in. But as it goes from the quarterly performance, last week, 2 billion in, last month, 2.3 billion in, last quarter, 3 billion out. So you got to take it all on scale as well and understand what's going on here. But on the short term, yes, we've had a massive pump. Price is pushing towards levels that we really did not anticipate getting touched for a hot minute. Like if if last week you told me that we'd be talking about $80,000 Bitcoin, I'd be like, okay, maybe in December after a nice pump, not in August, the week after we were talking about maybe going down and retesting that $62,000 level. So once again, crypto's volatile. It's why we're here. It's part of the game. It's why we're choosing this stuff as opposed to choosing traditional stocks and whatnot. And for the record, I do just want to pull these up real quick. S&P 500. Where's the pump? I don't see it. Looks like a dump, actually, or at least a small market correction after the pump was last week or 2 weeks ago, pretty much. If we flip over to Peter Thiel's favorite asset, gold. Gold's having a small little run here, but not in the same magnitude and not in the same shape and timing as Bitcoin. Silver.
Crypto's going to be hold on. Crypto's going to be the most volatile of them all just because of how small the market cap is. Smaller the market cap, just like you showed the small cap coins, right? The smaller cap coins below 500 billion. Smaller the liquidity, the more it can pump. And that's why you're seeing those bigger moves. That's why, I mean, honestly, when you see Ethereum and Bitcoin move, they're the largest ones in the crypto industry, and they've just moved massively. I mean, can you imagine if the S&P 500, you're not going to see a 20% move in the S&P 500 unless it's recovering from a black swan event. That's typically when you're going to see that kind of stuff happening. So, and that's why I say you're not going to calculate this. Nobody knew that. Well, insiders certainly knew that they were going to be doing this, which is kind of a shout out to, did Pulse Chain front run some of this? I know that's something else we were talking about because prices already moving for about a month. We talked about it last show, about another month we've been pumping, and now all of a sudden this gets behind the tailwind. Now that's just adding to the fuel too to pump even more. So it's interesting how Pulse Chain community started pumping with its coins a month prior to this move. I'm not saying they knew anything, but maybe, possibly, people started seeing the opportunity here, or were they just lucky? I mean, who knows? But there could have been people that might have been looking at what they might have been doing as far as buybacks on the debt because they had to take action in some shape or form, right? We all knew they had to do something, so they stepped in and did something, and of course, it's risk-on assets.
I happen to think that the pumps are not correlated. The Pulse Chain ecosystem has showed it can pump entirely independently of everything else going on in the market. True. And by the data that we were getting from Dace and the tools he was using, it was showing actual capital injection, which is the cause for that. So I understand what you're saying, but I don't think I'm there. Yeah.
It's all speculation. Agreed. Yeah, I get it. But I just think it's pretty, I mean, the timing, you couldn't have asked for any better timing. And that was about as perfect as it can get, the pump a month prior to this. So that definitely feels, now there's just more wind behind it. Do we want to get into what caused the market to do this? I'd love to
Yeah,
get
let's
into
talk about
that.
some whys. Alrighty. Coming to us from CNBC. Sure. Uh, Bitcoin heads for the best weekly gain in 3 years as crypto rally gathers pace. Okay. Bitcoin is on track for the strongest weekly gain in more than 3 years, going up 23% as lower treasury yields, renewed institutional demand, and a wave of short covering fueled a broad-based crypto recovery. Bitcoin was last trading around 77,000 compared with 63,000 at the start of the week. Crypto-linked stocks also surged, with Coinbase and Circle gaining more than 9%, while Strategy advanced 7%. The rally gathered pace on Wednesday after the U.S. Treasury Secretary Scott Bessent announced plans to at least double the size of Treasury's long-dated bond buybacks. The move pushed longer-term Treasury yields lower, easing pressure on risk assets and helping revive demand for cryptocurrencies. Max Studline, head of partnerships of Signum APAC, told CNBC that Bitcoin's move reflected an alignment of macroeconomic and policy catalysts. He said the Treasury's decision to increase buybacks of long-dated government debt was aimed at addressing concerns about long-term borrowing costs, rising U.S. debt levels, and a potential crowding out effect of debt insurances by hyperscalers. The macro boost was followed by a powerful short squeeze as well, forcing traders who had bets against cryptocurrency to close their positions. CoinGlass data shows that roughly 2.7 billion with a B in crypto short positions were liquidated as the rally accelerated. Quick pause, real quick. Chart for you guys. This is the cryptocurrency liquidations by CoinGlass. Does anything look like an outlier to you here? The answer is yes. We had a massive day. This is the single day, the first day, by the way. 2.7 in shorts alone liquidated. Next day, got another 670 million. And today, another $1.2 billion. So in total, we're looking at close to $4 billion in shorts alone that were liquidated in the last 72 hours.
Hey, Zenith, can you zoom out a little bit more on the chart? That's 90 days. Let me just see all. I'm just curious to see what it looks like on an all.
We know where the
Might
big one's
take
going to
some
land.
time. Yeah, gotcha. Okay. But look
All
at
right.
the liquidation, though. That's what I was going with. Okay. It's still very significant even on the all data. Interesting. Okay.
Yes, that is one very important point. Unfortunately, our data for liquidations is going to be skewed for a long, long time because of one day and one company, cough, cough, Binance and your stupid Oracle. So, yeah, if we go back, the infamous day, October 9th, that is the day that we had our pretty much the top of the market came in. But after that, our other day is looking at the 21st of September. But in comparison, I know it's kind of hard to see on the screen just because of the scale of the chart. I apologize, but blame Binance for this one. Yeah, this is one of the larger single liquidation days that we've ever seen. Honestly, I think it's actually in third place currently for the most, because typically if we get over 1 billion, that's a big day. If we get over 2 billion, that is a very notable event. And we only have a handful of those that go back to pretty much when this data was started to be captured back, or this is 2025. Yeah. So not a ton of data, just pretty much like year and a half, 2 years worth. But look, this is a cataclysmically large number. This is the stuff that will absolutely wreck people. And the reason for it is pretty much what I was alluding to last week when we were talking about price action. If you're tracking 60-day cycles or just basic trader movements, things were indicating that we were heading towards that 20-day dipping below the 50-day. That's an indicator that the direction's going down. We got the absolute opposite of that, and instead we went massively towards the upside. And as a result, that's where we saw a ton of liquidations. Granted, there still were a handful of liquidations on the long side of the house that were getting shorted along the way, just because of the way that price action moves and the amount of leverage you can put onto it. So looking at about 300 million, quarter million, 200 million. So like $750 million in the last, $750 million in the last 72 hours from longs getting liquidated as well. It definitely helps add up to the grand total of things that are getting absolutely whacked out here in this market. Anyways, back to the article. So Robert Lucas, an analyst at Bitcoin Markets, told Bloomberg that the key driver was the Treasury's decision to double its long-dated bond buybacks, which pulled long-term yields lower and lifted risk appetite more broadly. She cautioned that while nothing had changed Bitcoin's long-term investment case, its volatility remained intact. The squeeze continued to play a major role in the rally. One of the lead researchers said that nearly 2.5 billion in leverage, bearish bets, and 4.5 billion across all crypto assets had been liquidated over the last 3 days. The rise also coincided with a return of institutional money. US listed spot Bitcoin exchange traded funds, ETFs, are on track for their largest weekly inflows since January, with 13 of the ETFs attracting more than $1 billion this week. The improving sentiment has prompted some analysts to reassess their forecasts. That guy wrote a note to his clients that there is now a risk to his 100K Bitcoin year-end forecast because it could prove too low. Policy developments have added another layer of optimism. U.S. President Donald Trump met with crypto industry executives this week, including representatives from Coinbase Global and Payward, and urged the Senate to pass the Clarity Act, a crypto market structure bill that has stalled over disagreements surrounding its ethics provisions. All right, so the article is pretty much laid out all the different talking points that we're going to hit so far. Number one, long-term bond buybacks lowers the yield on the long-term assets. Number two, we have the announcement of the CFTC saying that if the Clarity Act is not passed, then they will take measures in their own hands and actually pass market structure regulations themselves. Lastly, we have the short squeeze. And thirdly, we also just have straight up injection of capital as well. These four things, I don't think any single one of them is the cause explanation for this. It's kind of just one of those things where you get the perfect storm of a bunch of things lining up at the same time. But also, if you hadn't showed me the price action for what's going on, and you just gave me these headlines about what's going on, I wouldn't believe that Bitcoin would be pumping this much due to all of the other outside forces that are going on right now. That's just basic chart dynamics, 60-day cycles, overall 4-year cycle, and just being in the bear market and hunting for a market low sometime in the next like 3-4 months, pretty much. Despite that, price did still jump all the way up here. So let's break down each one of these and see how viable we think that they are. So where did my... So number one, I thought you might find this one interesting. U.S. debt tops $40 trillion.
Yeah, I saw that. I wanted to back up on something you were talking about on a couple of the talking points on this.
Yeah,
what
yeah.
this did to
Let's hit them
the
one at a time.
landscape. Well, yeah, let's hit them because I mean honestly, this crypto is in the perfect spot for all of this. It checkboxes everything because of what they did. The first big one, obviously, no question about it, is the liquidity yield. The fact that they're going to inject more cash into it. So basically, instead of printing cash, they're going to inject cash by buying back U.S. debt, right? Obviously, you've already stated that. What does that do? That injects more money in there to take on higher risks. You know, and this is risky investments. Obviously, crypto's been lumped in there with TradFi with risk on appetite. So it's in that category. Check. Couple things that are not on this list that I wanted to, and the settlement we've been talking about, it felt like we've exhausted the sellers in crypto, right? It just felt exhausted and everybody was wanting lower prices. Well, when everybody typically wants something, that you ain't going to get it. Then on top of that, institutional buyers, smart money has been buying it up hand over fist, dollar cost and average into these it's just long pullback. They've been buying aggressively. With that combination of exhausted sellers, any good news was going to pump. And a matter of fact, if you think about it, even when Clarity got pushed down the road until September to talk about, did you even see the price drop? No. Any negative news? It really wasn't affecting crypto. Even during when the war was going on, crypto really wasn't being affected. It was kind of trading completely decoupled from the overall markets, doing its own thing. It was so beat down. So I feel like that's basically what's happening here. Everything was so beat down, ran out, blah, blah, blah. Now you lead into positive news that's going to inject maybe risk on capital. Yeah, it rings the dinner bell. So to me, the yield coming in, that's going to be huge because that's going to put it in there. Anything about weakening the dollar, that feeds right into the crypto narrative. Why Bitcoin was created, why crypto's even here to begin with, is the fact that nobody likes the weakening dollar because the dollar keeps getting weaker and weaker, right? Because of these types of moves that they're doing. So there's that concept. The other big one, obviously, you'd already stated on the Clarity Act, we don't have to worry about because the SEC is going to step in. They're going to take action in their own hands. They're not going to keep messing around. They're going to get something in place. So that gets more, more appetite to get more invested in this area because it becomes more, clear there. And then, of course, the hard money narrative, which is basically anything that is hard money, like hard assets. Well, that's gold, silver, copper, collectibles, all the stuff that we've talked about, that where crypto kind of falls into that other asset, where it's kind of trying to decouple from the actual fiat. So once again, anything that does that to damage it, that's going to speak it. So crypto kind of check boxes all of these. But if you want to go into more detail here on Zenith on those ones, we can certainly get into them.
Yeah, let's start with the long-term yield buyback.
Mm-hmm.
So I understand if you're listening to the show and it sounds like we're throwing around a ton of jargon. In essence, what's going on is that the US government is buying up long-term bonds out of the market. What that does is it removes the bonds from circulation and it puts cash back into the marketplace. That's the liquidity injection that they're talking about. What that means is that the yield that those long-term bonds are going to be giving goes down. And it means that people now have more cash on hand to figure out what to do with and try to figure out where to invest it. And if you have cash on hand, you're looking to invest in a bear market like this, you find those assets that Tracker just mentioned. Hard, solid assets that are not pegged to the dollar. That's going to be your stuff like gold, silver, collectibles. Bitcoin falls in there as well. Real estate, businesses, these kinds of things. So changing
And just to add there too, we know that fiat sucks because it's losing inflation roughly about 9% annually. So you don't want to just sit in cash. You've got to put it to work. And that's why Zenith's saying it's got to find a home. Well, you're going to find a home where it's non-tied to any fiat for this whole purpose. All right, go ahead, Zenith.
Oh, you're good. Yeah. So that's pretty much that one. That is policy decision from the Federal Reserve, basically. That's what's going on there. As far as
hold on. I do want to state why they had to step in, though. They had to step in because nobody was buying that debt, the bonds. Essentially, they just kept going down. There was no appetite. Well, who buys the U.S. debt? Well, all the countries. That's what these tariffs and negotiations are all about. All this stuff is happening behind closed doors, but no one's really stepping in and buying it. So they're going to have to step in and buy it, which then builds up confidence in the U.S. economy. It's all about keeping that confidence that the Fed is here to make sure that the U.S. dollar stays as the world currency. They're going to take any measured actions, blah, 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 whatever jargon you want to spit out that they throw. They're going to prop it up. Well, this is how they're propping it up and build confidence back into for U.S. dollars, because when no one's buying the U.S. debt, that loses that's confidence just going down on a chart. So just FYI.
True. And then for the Clarity Act stuff, I happen to not think that this one is as big of a factor as I think the news stories are making it out to be. Pretty much the Clarity Act, as it stands right now, is on its last legs because Congress is out to recess. There's going to be one more session in September where there's an opportunity to pass it through the Senate and get it signed by the president. But that's still just a chance, just even a chance to get on the docket for it. As a result of this, the CFTC, not the SEC, the CFTC, the Commissions and Futures Trading Commission, Commodities Futures Trading Commission, those guys have been in a battle with the SEC over control of cryptocurrency and what they are. Previously, the SEC claimed that pretty much all crypto was a security. Therefore, they get to claim authority over it and put it into securities law. The CFTC thought that, no, these are actually commodities. Therefore, they fall under us. Historically, the CFTC has been a lot more favorable than the SEC when it comes to investment vehicles and stuff like this. So the CFTC took the news that the Clarity Act looks like it's probably not passing. Definitely if you look at the poly market odds, it's a long shot at this point. So instead, they've identified that having basic market regulations and market structure put in place is very important. And they're willing to do it through their own internal mechanisms. We don't have any official language on it, but we just have their intention to do so. Is this big news? Yeah, kind of. Is it game changing? Honestly, not really. Because if that does actually come to fruition and is the outcome, it's fundamentally not going to be super different from what was already proposed in the Clarity Act. In fact, I would be surprised if they didn't just straight up base it off of what's in the Clarity Act as it stands right now. So I'm looking at it, and it's like the landscape really hasn't changed that much. It's just someone else is trying to pick up the torch and say, I'll carry it, instead of just leaving it to the government, leaving it to Congress and the Senate to do, which is a bit of a harder ask, ironically, even though it's their job. But just realistically, that's just the way that this goes. So overall, I happen to think this is not it's not the big news story that's pushing the pump. I understand why it looks important, and I think it is fundamentally important, but I don't think it changes the game.
It doesn't, but what it does is it's just another checkbox to say, okay, all of the concerns around crypto are keep getting addressed. So there's once
Correct.
again, there's more risk to the upside because it's been beaten down while everything else has gone up, and now you have all this liquidity coming in. People have already been taking profits in other areas. Where are they going to rotate money? Money's going to rotate into where the opportunities are, and crypto is that opportunity because it has a lot of upside because of this. And of course, the chalk box, blah blah blah. But the Clarity Act and all this other stuff, it just puts another backstop. Okay, if Clarity Act doesn't happen, don't worry about it. We got another plan B in the works. Don't worry about that. We're gonna get this thing going. So it just keeps building up more and more narratives to support that the bottom is in. And honestly, I think now with this move, the bottom's in. Could we retrace all the way back down potentially? We could. We could. I just don't think it's likely. I think you could still get a pretty big pullback for whatever reason, but like I said, I think the risk is still going to be much more to the upside than where we are. And I think this falls right in line with what we talked about. The top wasn't very clear. Well, guess what? The bottom's not going to be clear either. And that's been brought to you by TradFi.
Yeah, we'll definitely try to answer that question to close out the stream. But as far as this, so we talked about the bonds, we've covered the Clarity Act stuff. The only other two are capital injection and the short squeeze. I happen to think that the capital injection, there obviously is real capital coming in. That is undeniable. Part of that is due to the whole bond situation. Granted, I'm not saying that it's 100% transfer from money from bonds directly into Bitcoin. That's not how that works. If anything, it's probably like maybe 3% at most of that stuff going into crypto. But at the same time, injection of capital is real. And this is a time where, like you said, sellers have been exhausted. The liquidity is very, very low historically compared to a lot of the other times that we've had in the last couple of years. So based on that, it doesn't take a whole lot of capital to move the market. But to move the market as aggressively as this move was, this is where I think the short squeeze story is actually some of the most plausible answer here for what is the largest effect. The reason that I say that is that the short squeeze, what happens during it is that you create a positive feedback cycle, meaning it feeds into itself. It is the hurricane that is getting stronger from the own power of the ocean. That's what you have here. Because when you are shorting the market, you are effectively buying an asset, selling it, and then expecting to pay it back at a later date at a lower price. Because price went the opposite direction, you now have people that are trying to cover those positions, buy the asset back, which again increases demand, which pushes the price up further, which makes more people with shorts have to try to cover their losses, which increases demand again up until the point where either all the shorts are liquidated or everyone buys back the asset to cover it, and in which case things peter off and kind of die down. I happen to think that 3 consecutive days of basically over $1 billion in liquidation each, it's going to exhaust that pool rather quickly, but it does create that positive feedback loop that I mentioned, which in my opinion is honestly kind of the reason for why we didn't get the initial start of it, but why we got the continuation of the pump. The start can be the injection of capital. That can push price up. The compounding effect is the shorts and the short squeeze that's going on here. That really ratchets it up and keeps it going and continuing towards the upside. And in my personal opinion, I think that is actually probably the best explanation that we have for it. Crypto's been super dead for a long time. Sentiment is at all-time lows. The fear and greed index has been in the absolute dumpster for a long time up until very recently, which looks like this, by the way. Oh, almost looks like the Bitcoin chart. Look at that. We were sitting around 30, got all the way up to 72 where we're at currently. Because remember, previously, not that long ago, back in June, that's like 2 months ago, we were down in the single digits. So because price has been down for so long, because sellers are exhausted, liquidity is low, price can move up rapidly. When price moves up rapidly, you get those short squeezes. As a result, other indicators like the fear and greed index, which we're looking at now, these things have a chance to spike hard. And even stuff like RSI, when we go look at it, that is a hard spike in RSI. That's not just like poking up into the overbought territory. That is a massive just expedition into that territory.
Yeah, if you zoom out, it doesn't happen. Yeah, if you zoom out a lot, it doesn't happen very much where you get that kind of extreme RSI point. And typically those are met with sideways consolidation to, like I said, a pullback opportunity that's short-lived.
Correct. Like even if we go back and we look at some of the tops or this like massive pump after the old tariff debacle, I need RSI. We're looking at like these little peaks right here on the chart. This gets all the way up to like 80, 78. We're all the way up here at 86. This is even a larger pump than when we had back in after the election and got to all new highs and broke 100K for the first time. The only time we really rival this is if we go all the way back to when the original pump from the ETFs back in February 24, March 24, that kind of stuff. And if you remember that price action, that was it. That was a large sustained price action. This realistically is only a 23% move towards the upside. I don't know if we've said that yet, but in the grand scheme of things, 23% gain is not that crazy. For Bitcoin, it can be on the higher side just due to how large and massive the market is. But overall, like, it's not the greatest move in the world, but a lot of the indicators that we're seeing are sending off alarms all over the place of this is a seismic level event.
It certainly was. No, it certainly is. That's a good way to put it. Everything. I would agree with everything you're saying. I just think the other little fringe pieces that add to it are the fact you have a weakening dollar because of this move. They have a weakening dollar. That's also, risk on. It's going to help out. I mean, those are other little fringe things. But what we're saying is there's a ton of checks boxes of why crypto is so in favor for this pump. And it just exploded to the upside because of this. I mean, and honestly, just needed something like this to happen to get it going. Now it's got everyone's attention again. Now you saw the inflows come in. So we wait and see how it's going to happen. But like I said, I still think you're going to end up having somewhat of a sideways consolidate. Like I say, it could grind up a little more. It certainly can. I'm not going to sit there and say it can't, but you will see some sideways consolidation. So be prepared for that. Me personally, I'm long. Like I said, we were talking on the show. I mean, I was dollar cost averaging consistently into Ethereum constantly during this entire pullback and aggressively over the last, so many months. Getting aggressive and then just taking some off the table, and we've been kind of grinding up. So still heavily Ethereum. And then of course, I know we talked about it heavily last week. Pulse chain. I mean, it's keeping grinding. It's just grinding higher in all positions.
Yeah, and the pump to Ethereum is only going to help that. As far as my analysis of all the reasons about why the pump, did that make sense? Any questions you got for me on that? Any disagreements?
No, if anybody has any comments, put them in there. Questions about any of this stuff, post it. We'll try to address it for you guys. But ultimately, that's just it. It just check boxes all the major things that why this is a perfect environment for crypto and why it's going to do good. And honestly, think about it. What was the whole reason why Bitcoin was created? Monetary, irresponsibility from the recklessness of the Federal Reserve and the printing, and how people are fed up. This is just another thing that adds to that fire. This is why it's there. So. Yeah.
True. Anyhow. All right. I got a couple more things before we answer the final question. If you've been on X lately, sentiment is all over the place. I think that the current bear market feeling looks like this when crypto is going too well for 3 days in a row, waiting for the other shoe to drop. Agreed. Additionally, we have stuff like this coming to us from Ronald Carter. Something very weird is happening with Bitcoin. 64 to 77 in days, almost straight up. Not a normal bounce. Trump suddenly turned aggressively bullish on crypto. He's always been aggressively bullish on crypto. The Treasury doubled long-term bond buybacks. Yep. Institutional money coming back through ETFs. Yep. Shorts getting destroyed. Yep. But still, this move feels bigger. Bitcoin isn't even giving people the pullback they're waiting for. Every dip gets bought, which makes you wonder, are institutions front-running something we don't know yet? Is another major crypto announcement coming? Is someone positioning before the rest of the market finds out? I don't know, but I know what the price is telling us. Everyone is waiting for the bull trap. Everyone thinks they'll get another chance at 65K. 2017 taught us what happens when Bitcoin stops giving people clean entries. 77K could look ridiculously cheap in hindsight. Prepare for what comes next.
Well, just FYI, we're pushing close to 80,000 on Bitcoin right now. So this is already behind just in a few days or whenever it was written, because we're pushing up towards 79, I believe, on Bitcoin. But ultimately, yes, all those things are true, but the whole thing about all this is that we've been saying that things were going to things will eventually, we're running out of steam. We're going to turn around, and that's exactly what we're saying. Everything's turning around now. Now, people that still think we're going to get a pullback back down to the bottoms, I don't think it's going to happen. That's my 2 cents. I think that's come and gone. With this move with them, what they're doing here, no, that essentially puts risk on. So I think we're going to get next leg up. Now, are the ETH, is it going to be suppressed again? Time will tell. Is Bitcoin going to be allowed the only one to run? I don't know. We'll see. But
True.
that's going to be the big
Already,
question.
I got two more of these for you. Mark Chadwick. This is why crypto is pumping. The institutional power players sitting on trillions of dollars don't have time to wait for politicians to get their crap together. CFTC Chair Greg Selig just made it clear if the Clarity Act stalls, the agency is moving forward anyway with formal market structure rules under existing authority. They're going around the gridlock and getting it done. Crypto is about to get its day. So,
well, just to go back on the other thing you stated, he's correct, 100%. Trillion, like you got politicians holding up the party here, and everybody's ready to go. And the banking sector, that's the other thing that was coming out over the last so many weeks. Some of the banks have been coming out saying, let's get the Clarity Act passed, let's get this thing going. So it's like the banks are ready to jump in on this thing now that they've gotten their tentacles and everything, and they've got kind of an understanding of the landscape, and they're caught up to the newer generation of finance. So maybe they're ready to go too. So I don't know why there's a stalemate here going on. So yeah, they got that thing. But what I was going back to the other one that stated was, it feels like that the institution knows something that we don't know. We already know what that's going to be. Tokenization of everything across the board is coming. Like that's all happening. This is coming. Whether people want to sit there and it's just like with the internet and with the massive data transformation and then the data centers and then tokenization. I know I'm speaking very grand, but all of those things that if I would have said 10, 20 years ago, this is going to happen, you'd be like, that's not going to happen. Well, it's all happened. Everything's happened. We're coming to a point where there's going to be a major upgrade to the entire financial institution, and everything that's telling you, if you're watching this and been following this thing closely, there is a much stronger narrative that this is coming than not coming. Okay, what the current system is not working anymore. And keep in mind, with this massive buyback on all those treasury debt, on the U.S. debt, what have they been using to buy U.S. bonds with there, Zena?
I actually don't know this one. Enlighten me.
Hey, you do. It's simpler than anything. Stable coins. They've been using stable coins to buy U.S. debt. They've been buying bonds with basically stable coins. That's going to also be moved into more injection to the stable coins onto those blockchains and those networks. That's coming. That's already been coming. It's been buying. Hell, UST just said they just minted another. I forgot how much it was. It was definitely an alarming amount again. They just keep printing more and more because they're using that to buy back the debt. They're putting it on there. Now what the plans to do with all that, that's going to be a bigger question we'd have to dive into. But what I'm saying is, yes, all this stuff is coming, whether you like it or not. We're going in this direction.
That's true. Yeah. Alrighty, final little X post here for you. Bitcoin is currently doing its final limp dick fake out before it drops to the 40, 50K range. And there's a high probability it'll drop below 40K by the end of 2026. There hasn't been anywhere near enough pain in the crypto market yet. Because 2027 is going to cause so much carnage in the macro, there's a good chance that we don't even see a legitimate recovery until 2028. Very few will tell you this.
This guy's on crack. I'm sure there's drugs involved on this one. I'm sorry. There hasn't been enough pain in the crypto market. What are we talking about? All coins, everything are down 90% across the board, if not more. Things have been bludgeoned to death. Crypto was muted outside of Bitcoin and maybe a couple other little, winners. It's been muted for the most part. Never got an altcoin, never got a true top, and now we may not get a true bottom. I mean, I don't understand what this guy is expecting is blood, but we've had 5 years of this just beat down. Like, come on, man, what are we talking about? That there hasn't been enough pain. For those that have been holding, there's been nothing but pain. I mean, come on.
To argue for the post, or at least maybe the sentiment behind it, I think it's kind of pointing back to the idea that Bitcoin prices only fallen 55%. Typically, we see something. Well, last cycle we saw 77%, 78%, depending on how you calculate it. That is
how much were the one
different.
Before, and how much was the one before?
About like
right.
90.
So what do we say? Right. So those dips are getting less and less. And what is that a reaction of? Oh, that's a maturing market because you have TradFi and real money being injected in here. You now have institutions involved. You're not going to see the massive swings and drops like you used to, certainly with Bitcoin, because it's such a mature market. You have you have governments around the world buying it. Come on, like it's a matured asset. Ethereum is
I
less
understand
mature.
your point. But I think the idea that's going on here is that it's a deviation from the model. There is a projected decay rate for the drops as they move into the future. This is significantly above it by a large factor, which is why I think people are still looking for more drop to come. If we look at some of the other stuff that we've been pulling up consistently, whether it's the bottom indicators, the 200-week moving average, the cost of electricity production for Bitcoin, we haven't dropped too far below these things. We've definitely spent a little bit of time right at it, a little bit just under it, but nothing like we've seen in the past cycles. None of the bottom indicators really have hit. And granted, I think this is just going to be an eternal question that we're never going to get answered, which is, are we going to see muted bottom signals because we got failed top signals in the last cycle? I don't know if one precludes the other, but these are going to be the kind of arguments that you're going to be facing if you're trying to say that the bottom is in. So if that's the case,
the easy picking and top, those days are over. Sorry, those are done. TradFi's going to muddy the waters up, just like the top was messed up. Some people say, no, Bitcoin was right on spot, 4-year cycle was right in place. Let's go. Okay, that's fine. But here we are now to the downside. I'm sorry, manipulation is going to be all over the place. You're not going to get clear entry signals like you used to. Those days are gone now that TradFi's here. They're not going to allow. Don't get me wrong. Sometimes they may. I mean, this is still a very young market, and even Bitcoin is still very young. But over time, you will see a mix of all. You'll see where bottom indicators happen. You'll see sometimes they don't happen. Sometimes tops happen. Sometimes they don't happen. There's just too many variables now. And
Tracker, I think you cut out on me. All right. Waiting for Tracker to get back.
Did you lose me? Did you lose me?
All right, you're back now. And you're out again.
Go ahead.
Okay. I think it's time to answer the $1 million question. Was that the bottom, and why? Would you like to go first, or would you like me to go first?
My phone's about to die, so I'll go first. Like, what is the $1 million question, if we should ask?
Was that the bottom of the market? Did we see it?
I hate to pick the bottoms. I really don't want to do that, but I think with the 4-year cycle being so close right now and where we are, I'm going to say the bottom's in, because I think people are getting, you're cutting it too close now. Oh, we want the bottom to be right here in this price. Well, that's great and all, but now you've got liquidity chucked in. I just don't think you're going to see, I don't know if the bottom is in, but I'm going to tell you now, I don't think you're going to see 40K. I don't even think you'll see a 40 handle. And if you do, it's going to be a fast wick, fast snapback. If a black swan event happens, sure. But if we don't get a black swan event, it ain't happening.
That's fair. I understand the sentiment that the bottom is in. I don't think it's confirmed, and I think that your technical analysis will show you as such. The reason that I say that is because if we look at our chart here, coming down, there's a pretty clear 5-wave structure. If you want to look at it, here's the top. 1, 2, 3, 4, 5. Okay, that's all well and good, but your 5 is not really that much drastically lower than your 3. And if that's the case, well, then that means that there's still more to go. The thing that really invalidates this is if you break the structure with this move right here. If the move continues and gets above this 4-leg, that fundamentally invalidates kind of the 4-leg, or it says that this pattern is complete and finished. As far as the patterns go, I personally want to see a more drastic leg 5 to the downside to make it very clear what that is. But at the same time, seeing this sort of move to the upside is one of those things that does kind of suggest that we're either on a new pattern is broken, pattern is invalidated, one of those things. As far as the timeline goes, currently we're looking at about, no, I want you. We're looking at a low of 190 weeks. That translates to about 3.5 years, as opposed to what we typically look for, which is 208 would make 4 years. 204 would be 3 years and 11 months, which appears to be more accurate, by the way. If that's the case, then we're talking about a gap of 5 years. In retrospect, a gap of 5 years gap of 5 months in the span of 4 years is decently large, especially if we're looking at one of the more accurate and predictable 4-year cycle metrics here. If that's the case, and you believe that 4-year cycle is true, that means the bottom's not in. because there's still more time to go. There's still more events that can come. And all you got to do is get down below 58, like $57,500. I know looking at the move that we just had over the last few days, it's kind of crazy to say that we're ever going to be in the 50s again, let alone like actually hit 50 on the dot. But I think the possibility still exists, because if you saw the bump today and you see the drops from the last like 6 months, you know that these moves can happen in an instant. They build up slowly over time and then execute just like that. The competing theory, which we've been talking about for probably a year at this point on the channel, is that we're moving away from the 4-year cycle. We're getting something else. The things that are currently in support of that theory. We didn't exactly see any of the price targets on the top side that we wanted to see. We haven't seen the downside targets that people have been predicting for traditional 4-year cycle dumps either. The move here could be the starting move to really invalidate what was going on previously. And if that's the case, well, then it means that the extended cycle theory has some legs again. The last time we really talked about this was probably a handful of months ago. And even at that point, pretty sure I gave it less than a 5% probability of happening. My odds of that happening are still not very high, but the move that we've seen today, it does have to raise that probability slightly. But even then, I think I'm still looking at like 10, maybe 15% if we're getting real crazy with it. No hard data on that. Just my gut intuition is what I'm going off on this one. So if that's the case, I think that I understand people can foresee a pullback from this. It seems perfectly rational and logical. A pullback to new all-time lows, that's a different question entirely. And if we see that, that is probably going to have to take another black swan event, which with kind of the churn in the political system in the US going on and internationally as well, it's possible. Can't really predict it, because that's why it's called a black swan, because it's the thing you can't predict. But there are things that are stirring that are creating the conditions for that kind of event to happen. If that's the case, personally, I still happen to think that the 4-year cycle is holding true. There are more data points for 4-year cycle than there are against it at this point. And until we get confirmation that it's broken, I'm going to assume that it's going to hold true. And based on that, I'm kind of saying that, yeah, this is a nice little win. It's very temporary. Price is going to go down in the future. I know, call me a cynic if you like, but just trying to stick to fundamentals here. That's what I'm looking at realistically. I know, bit of a bummer to kind of end the show on here, but I think it's a realistic and sobering situation, which is that one of the things we started off the show talking about is looking at the price action and green candle syndrome. The price is going up massively. Could it continue to go up? Yeah, it absolutely could. Are there a lot of things it has to now contend with, indicating that it's not going to continue? Yeah, I think there's a lot of that happening. But this is a bit of a classic trap that people can fall into, which is you see price go up, you don't want to miss the boat, you get in too late, doesn't go up, in fact, actually goes down. And instead, that hopeful winning trade has now become a losing trade that you either have to figure out a new move to do with or capitulate losses, continue a DCA in anticipation of even more pump in the future, all that kind of stuff. The moral of the story is don't go chasing green candles. It typically doesn't work out very well. I will say, I'm not saying that this is wrong. By the way, Shirley Fortress 886, the staked Ethereum and Wrap Pulse pair on Pulse Chain is breaking out. That is different from green candle syndrome. I don't know the specifics of this one, but a breakout is different from a continuation move. What we're looking at here would have to be a continuation move. If you're doing a breakout, it means you're looking at factors that lead into a pump. Yes, it can include some upside in the short term. Typically it does, because you're looking at trying to break through a resistance level, a Fibonacci level, complete a sequence on the Elliott wave theory, one of those things. But either way, still wanted to give a massive shout out to all the Pulse Chain fans out there, myself included, because Pulse Chain's actually doing pretty well. And by the way, good to see you, Brian from the West. He said that the market said your name is Jon Snow and you know nothing. All he knows is pain. That's right. It does kind of feel like all we know is pain for a long time here. Even in the bull market the last couple of years, it just was painful kind of the entire ride, because no altcoin season, massive pullbacks, a lot of confusion, and no clear top. That's a pretty good recipe for pain. Alrighty. That is pretty much all we got here for you guys this afternoon. Thank you so much for tuning in. Our special Friday stream had some issues with the Thursday scheduling, but glad you all can make it here. And shout out to everybody catching it on replay as well. Appreciate you guys a lot. But if you want even more of this, you have any questions you want to ask us, you can hop on into our private Telegram channel. That is where you can find direct access to myself, Tracker, the rest of our team over here, and our fantastic community. And we've had a lot of chatter going on in the last couple days regarding what's going on here. But if you want to get inside there, head on over to walktheblockndef.com, find the membership tab, and you can sign up through there. Copywriting. Around these parts, we like to say that the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. We all work together. We can all win together. And we can also hopefully answer some of these very pressing questions that we're coming up with now. Okay. we got to figure out what's going on with the rest of this pump. Key targets we're looking for. Does this cross $83,000? If it does, that is an even better argument that the bear market is over and the bottom is in. Until that happens, there's still a lot of points showing that the 4-year cycle can hold. And there's plenty of time for it to prove true as well. Remember, we're looking at sometime October, November-ish for the bear market bottom according to 4-year cycle. And if you're not 4-year cycle, what you're looking for is that invalidation of higher levels. 83,000 is namely the first place you can start. So that's really the two competing worldviews that we got going on right now. Outside of that, there are some things happening. CFTC passing Market Structure Act would be cool. Them doing it and not the actual Senate doing it, that would be a different effect. We'll have to see what that entails. And as far as the market goes, the short squeeze could continue. We could see more liquidations, but keep in mind, there is a finite amount of shorts out there and money to liquidate. So keep an eye on all your indicators out there. Look for your liquidation zones and your heat maps. Look for your support and resistance levels when it comes to your charts, and keep an eye on the volume, both on the on-chain data and on the ETFs. Those are probably going to be your best friends when it comes to trying to figure out what's going on and make sense of the whole situation. But that's pretty much all we got. Again, thank you guys so much for tuning in. We will catch you guys next Thursday, 9 p.m. Eastern time. Again, apologies for the departure from the normal scheduled time, but still very excited to see all you guys. And shout out to all the guys in the private Telegram. We'll continue to be answering questions in there, posting a lot of good research because there's a lot of analysis to do on this one, both from price and also 60-day cycles. So I'm going to be answering those questions as well. Outside of that, like I said, it's been a pleasure. I will catch you guys next time. Thank you so much for tuning in, and I hope you all have a fantastic weekend. Happy Friday, everybody. Goodbye.